Okay, so here we have a problem that's asking us to calculate the income statement. So we're forecasting here. Lynn & Company is a service-based company. They are putting together their budgeted income statement for the next year. They project their next year's budget based on prior year's results, and their prior year's income statement is as follows. So the prior year's information is provided here. We've got sales less expenses, gives us our total expenses. Income before taxes, when we take sales minus total expenses, multiply that times the income tax expense rate, and that gives us our net income or loss. It's also telling us Linden's management predicts the following information in preparing for the budget for next year. Sales they anticipate will increase by 9%. Sales commissions are 11% of sales. Rent expense for next year is $2,100 per month for January through August, and then increases to $2,350 on September 1st. Advertising expense is 12% of sales. Salaries are expected to increase by 3%. Payroll tax expense is expected to remain at 7.65% of commissions and salaries combined. Depreciation expense is expected to remain unchanged. The income tax rate is 30%. And then let's go ahead and prepare that budgeted income statement. So essentially, we're just going to start at the top and work our way down based on the information we're given in the problem. So sales, they say, are expected to increase by 9%. So we can take our sales number, multiply that times 109%, or 1.09, and that's going to give me my anticipated sales for next year. Sales commissions are 11% of sales. So if we go ahead and take that number and multiply that times the 11% of sales, that's going to give me $106,007. Rent expense, we're going to have to do a little calculating because it changes mid-year. So we've got $2,100 for 8 months of the year, so multiply that times 8 and add that to the increased cost of $2,350 times 4 months, September, October, November, and December. That tells me that my rent expense for the year is going to be $26,200. Advertising expense is 12% of sales, so we'll go back up, grab our sales number, multiply that times 12%, or 0.12. That's $115,971. Salaries expense, what's it say here? Salaries are expected to increase by 3%, so let's go look at our last year's salary expense. Multiply that times 3%. Payroll tax expense, expected to remain at 7.65% of salaries and commissions combined. So let's grab our commissions plus our salaries. Multiply that times 7.65%. Tells me my payroll tax expense. Did I calculate that correctly? Oh no. So it looks like I have calculated the correct amount here. I grabbed the wrong number for salaries expense. We want the $210,000 times an increase of 3%. So that's 1.03. There we go. Now we've updated our payroll tax expense. This should be, there we go, $24,679, which was our salaries expense, and our commissions multiplied times the 0.0765, or 7.65%. Depreciation appears as though it's expected to remain unchanged. The last thing we're going to need is the income tax rate of 30%. So depreciation, we're going to grab the number here. Let's go ahead and total up all of our expenses. Pretty easy to do. If we add these together, you can see the answer that we get. Now here's what may cause a little bit of problems. Depends on the problem, but it actually says to round all calculations to the nearest dollar. So you can see here, that's how I'm presenting it as the nearest dollar. But if you would add all of these numbers and I round this one, there's a little problem here. And I'll show you. That says 458, but if you take 7 plus 1, that's 8 plus 9, that should be 7. So be careful with that because I'm not exactly sure how my Open Math will grade that. So you may have to physically enter 106,307 plus 26,2 plus 115,971 plus 216,300 plus 24,679 plus 23,000. And if we do that, you see we get 512,457, not the rounded 458. And this would be what we're looking for. Now we can take our sales number, which actually also should be rounded. So I can change that by clicking on my, take that number, 966,428, and subtract the 512,457 to get income before taxes of 453,971. My income tax expense then is 30% of my pre-tax income. So oops, let me escape out of there. What I want to do is take that number and multiply it times 0.3 or 30%. And again, that didn't come out rounded, so I'm going to go ahead and adjust that cell, take it down to 0 decimal places. So we get 136,191. So if I take my 453,971 income before taxes, subtract the taxes of 136,191, I get $317,780 as net income. So this would be my forecasted income statement. And this is my based on my prior year's income statement, taking into account all the adjustments.